Good day, dear traders. Let us review the events of the past week. US stocks started Monday session lower, but ended with solid gains as investors bet that the Fed will likely delay the rate hike after Friday's weak monthly jobs report. The S&P 500 and Dow Jones Industrial Average rose 0.7%. The S&P 500 was 1.1% up for the year. Nikkei advanced 1.3% to a near two-week high after the lead from US markets eased investors' concern about the impact of weak jobs data. The dollar rose to 119.64 yen from 119.53 yen. Gold prices were retreating from 7-week high as dollar was recovering. Asian demand was low due to relatively higher prices as indicated by less than $1 an ounce premium at the Shanghai Gold Exchange over the global spot benchmark. US stocks inched lower on Tuesday. The market sentiment shifted after the dollar recovered from recent losses in afternoon trading, which spurred investor concerns about the impact of stronger dollar on corporate earnings. The ICE US dollar index, a measure of the dollar's strength against a basket of 6 major currencies, rose 1.2% to 97.94. The S&P 500 slipped 0.2%. European stocks rallied on Tuesday as market sentiment was bolstered by easing of concerns about the US interest rate hike in US. Stocks Europe 600 climbed 1.6% to 404.34, just below its best closing level of 405.5. Nikkei hit 15-year high as retail investors acquired sizable stakes in 2 new stock mutual funds launched this week. Oil prices rose on Tuesday on expectations of second weekly decline in US production. It fell by 36,000 barrels a day for the first time since mid-January. The S&P 500 closed up 0.3% on Wednesday. The Federal Reserve March meeting minutes showed several policymakers had favored a rate hike in June. The ICE US dollar index was up 0.25% at 98.0790. Market sentiment was supported by new merger deals as Milan announced it proposed to acquire Perrigo for about $29 billion in cash and stock. European stocks inched higher as merger deal activity lifted energy shares. The stocks Europe 600 closed up 0.1%. Germany's DAX 30 fell 0.7% as auto shares declined on concerns of overly high valuation ratios after sharp gains this year driven by boosted earnings prospects due to weaker euro. Nikkei hit a fresh 15-year high as investor optimism was bolstered by finance ministry data showing that foreign investors bought a net 1.036 trillion yen, which is $8.61 billion of Japanese shares last week. US stocks ended higher on Thursday, helped by a rally in energy and healthcare sectors. Dollar continued its advance after the Federal Open Market Committee March meeting minutes showed several policymakers advocated raising interest rates in June. The ICE US dollar index rose 1% to 98.9110. European stocks rallied as market sentiment was buoyed by indications of improved performance of German economy, picking up in merger and acquisition pace and relief that Greece met a debt repayment deadline. The FTSE 300 index closed up 1.1%, hitting its highest level in 8 years. Nikkei fell 0.2% as investors took profits after the benchmark hit the psychological 20,000 mark for the first time in 15 years. Soybean prices fell to a 5-month low after the U.S. Department of Agriculture data showed world supplies will be bigger than estimated in March. Corn and wheat prices also fell, with inventories estimated to rise 10% and 5.7% respectively from 2014. The stocks of Asia-Pacific region closed higher on Friday. Nikkei rose 2.4% to reach 20,000 points for the first time in 15 years. The pound weakened ahead of the UK CPI release. The euro was also suppressed by the US dollar strengthening, investor concerns over Greece, and the QE program. The key events of this week include the following indicators. US core retail sales on Tuesday, which measure the consumer confidence and represent a particular interest for long-term investors. The European Central Bank press conference and the Bank of Canada rate statement on Wednesday. Unemployment claims on Thursday. Core retail sales on Friday. This was all for this week. IFC Markets wishes you a successful trading week, rich in news and possible volatility periods.